Hello, investors. Welcome to the channel where we look for possible swing trades using technical analysis. Before we begin, all I ask is that you hit the like button and subscribe. It really helps out the channel. And with that, today we're going to look at an unusual company, a bit riskier than those I usually examine on this channel. But that company is Northern European Oil Royalty Trust, ticker symbol NRT. This is a micro cap company with a market cap of just over $63 million. And as a royalty trust, what the company does is it owns land and it receives royalties from larger companies, in this case, ExxonMobil and Shell, who remove oil and other minerals from the land owned by the royalty trust. And then based on how much that oil and gas sell for, the company here, NRT, will receive a portion of those proceeds. And here we are on NRT's annual chart. You'll see that it is well below all the moving averages. There was a precipitous drop recently, including a gap down, followed by a huge red bar. And it just looks like we posted a green bar yesterday, although I certainly wouldn't call this a turnaround yet. Certainly too soon to call. But as you know, the probability of filling a gap is high, and it looks like the share price fell from just about $11 all the way down to where it is now at $7. So that's a significant drop in just a few trading days. And if you're wondering what it was that caused the share price to drop so much, well, it's because they announced that they would not issue a dividend for the fourth quarter of 2023, and that caused this huge share price drop. Now, if you're familiar with royalty trusts, you'll know that they are essentially dividend machines, that there's typically little share price appreciation. There can be some. If you look back in the chart here, you'll see it moves up and down. Certainly, you might be able to get a swing trade, but for the most part, it is trading sideways until, of course, you get a big drop like this. So investors who want their dividends are attracted to companies like this. And when they're told that the dividend isn't coming, well, you get a big drop like this, which could present an excellent buying opportunity for the rest of us. And if we look down here at the RSI, you'll see it is oversold and appears to be turning up, or at least going sideways. Same with the stochastics. They are oversold and are, if not turning up, they are going sideways. The volume chart shows a noticeable spike recently, and now we're starting to get volume returning to normal levels and get a couple green bars in there. And the MACD does look like it has formed a trough and is starting to rise, although we're not near a bullish cross as of yet. Now, if we look over at the fundamentals, you'll see these numbers are insane from the perspective of a normal company. But you can see here the short interest is at 2.49%, so not much. Institutional ownership is also quite low at less than 8%. Now we look over here at the financial strength, you'll see there is no debt. And this is very common. Companies own the land outright, and they've used their heavy cash flow to pay off any debt that they might have for operating and owning that land. But the PE ratio is low. Now, keep in mind, for all the following statistics here, we are looking at the oil and gas industry. And if you were to compare this to something like, say, ExxonMobil or Chevron, then you have to understand those other companies have huge amounts of equipment and employees, whereas this company basically could have very few employees and little to no infrastructure. So the numbers will skew drastically in favor of NRT here. And this is what you see. The PE ratio is 2.25, which is lower than 94% of other companies in the industry. Similarly, gross margin of over 96%, operating margin of over 96%, net profit margin over 97%. Again, the company, a royalty trust, simply collects money and little else. And as you might expect, the gross margin beats out 98% of companies, and operating margin beats out 99% of companies in that industry. And if you look at the return on equity, it's almost 4,500%, which is absolutely insane. It beats out 100% of others in the industry, unsurprisingly, and the growth rate is greater than 85% of others, and that's growth rate of earnings per share, so greater than 85% of others. Now keep in mind that these numbers are subject to gas and oil prices, so this could fluctuate significantly from year to year, which I'll look at in a moment. But then the dividend here, and this is really what you are buying this company for if you're buying it at all, it's the dividend. And dividend listed here is 38.27%, which is extremely high. Now, depending on which way you calculate the dividend, you could get a different number. I checked Yahoo Finance, for instance, and their dividend listed is 27.47%, which is still incredibly high. And Schwab has a different dividend, which I'll look at in a moment. But the payout ratio here of 97.72% is typical for a royalty trust where they return all profits to shareholders and they simply keep enough for their operations. And here we are on a dividend page for NRT, and I'll draw your attention right over here. You can see the annual dividend in Schwab here is listed as 43.42%. which is significantly higher than even both of the other sites that I looked at. But just in case you're wondering why the share price dropped, I'm a little perplexed because, as you can see, this is year to date. They've already paid out $2.26 in dividends, and the total there is greater than any year you can see listed here back to 2015. So they've already paid out significantly more dividends than in the last several years, but the failure to pay the 1 quarter resulted in a precipitous drop in share price. And even if we were to examine this, we look back and we say, well, here's a low year, it's only 32 cents, here 82 cents, 70 cents, 76 cents, 67 cents, $1.27. You look here at 2022, it was $1.83. So let's just say, for the sake of argument, that this works out to about 70 to 75 cents per year you receive per share. Well, that's a 10% plus dividend yield sustainably over the course of several years. So that is certainly nothing to sneeze at here. I think if you're interested in a high dividend yield company, then perhaps now might not be a bad time to look into NRT. But please let me know what you think of this company in the comments below. If you enjoy having ideas like this sent directly to you, please hit the bell notification to be alerted when new videos post. And remember, I'm not offering financial advice. I'm not a financial advisor. Please do your own due diligence if you look to purchase shares in any company. These videos are for entertainment, discussion, and education. And if you'd like me to analyze a specific company using these metrics, just let me know in the comments and I'll get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.